Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin, Dennis Dick out again today. It's Fat Tuesday, celebratory day. Will the market celebrate? That will be, of course, the question. It looks like buy the dip has worked a little bit. We stopped going down, at least for now. So we'll talk about the sentiment heading into today's session. A lot of earnings on our radar as well. Two guests on the docket for the day, both options focused. So it is options day on the show. The first guest, Dmitry Pargamanik. He is the co-founder of MarketChameleon. He will join us at 8:15, and at 8:35, we'll be joined by Chahine from Create Income with Option Spreads. In the meantime, Joel, what is the word here in the overnight session?
Technical Tuesday here in the S&P 500 index futures. Pre-market high made around 8:30 last night at 59.50. That's 2 ticks off your intraday high from Monday. Big level on the upside. Pre-market low 14.25. That was made in the first minute off that 6 p.m. open. That's a real great area. That coincides with your low on January 31st at 12.75, and also Monday's low that came in right at that area as well at 14.25.
It's just crazy, how the buy the dip mentality. I was reading an article in the journal just to they always find that, how they always find like the most random retail investors for everything. For every article, the journal can find an investor off the street to talk to them. And they're just talking to random people about how, yeah, they're going to buy the dip today, and they couldn't wait to buy, and they couldn't get into their platform to buy because Schwab and Fidelity they had outages because the volume was unusually high, and they were trying to buy, but they couldn't, but they would have bought if they could. And it's just crazy how every dip seems to be bought to an extent,
Well, it's worked, right? For the last 10 years.
Yeah.
Once again, it's such a generality to talk about a retail investor or investors.
Sure, of course.
Buying the dip.
Sure.
But, I think it all, and we try and talk about this on the show. I know we have investors that are, big day traders and scalpers and option traders. We have swing traders. We have long-term investors.
Right.
So it's all about your investing time horizon. And, so just try and keep that in perspective. I think some of my best trades or some of my best long-term are things that I don't look at. And just kind of, sometimes that could be a bad thing.
Right.
But, what you see on the screen can be deceiving, especially since between 9:30 and 4. If you look at the trading action from yesterday, I believe we opened up at 32.5, and probably between the intraday ranges, we probably had 150, 160 points worth of ranges, and we ended up settling within 3 points of that opening print. So it's hard trying to tune out the noise, tune out the tweets, tune out the virus, and have a long-term
especially on Twitter, right? Because for every panic headline, there is somebody who is reading that and panicking, and there is somebody else who is like, "Oh, you guys are just trying to make me panic and make me afraid, and I'm not. I know that the market's going up, and I'm not scared of this, and I'm not scared of that." So it's really, obviously it's really hard to get a feel for the sentiment from Twitter, but it's just one of those things where it's almost unbelievable. It's almost unbelievable how relentless this market can be at times. And we talked yesterday. Yesterday felt like it was a long time coming, right? We were waiting for a big down day. We got it, and I guess
the word you're looking for is capitulation.
Yeah.
And you get capitulation on the upside and the downside. I'm really comfortable with the numbers and the levels today. You have a potential triple bottom in place, that January 31st low, match the last 2 days. So, sometimes I say, oh, we're just going to thrash it out between those two levels, and, we bust out one way or another. But big gap overhead in the S&Ps that we need to fill. So,
Yeah.
there's a lot of air, but the market will do what the market do. It seems like over the weekends when you get the, you get the bad news over the weekends, and we definitely got some bad news over the weekend. The market had digested it, really not much bad news overnight. And, we're back to a little bit more of a normal market today.
All right. So let's get to some of the stocks that had good days yesterday in the S&P 500. It was a down day for nearly everybody, with a couple of exceptions. One of them being Gilead, and we've talked about this on the show. They have their drug they're developing for coronavirus symptoms, and I guess they're making progress on that. And they may be in the lead in terms of developing some sort of treatment for the coronavirus, and investors love it. They were looking for something to buy yesterday, and they bought that.
You must have read my Stock of the Day article yesterday. That was on Gilead. Yeah, the stock in need of a catalyst, right? They kind of hurt themselves by being too good of a drug company and curing hepatitis C. They've tried to buy growth with the various companies. And I guess the street just told them, hey, if you're going to cure something, you better have something else in your pipeline. And they don't. So now here you go, something in their pipeline, potential. I have no idea how effective it's going to be. You have no idea how long it's going to take to get approved. But in this lack of fundamental, catalyst driven market, who cares, right? Who cares? Space can go to, from $5 to 50. Why can't, Gilead make an exaggerated move? So, hopefully the virus is contained. Hopefully there's a cure found. Trading up in the pre-market trading here. Trading up $1.15, but you still haven't cleared the high from yesterday. So 74.52. You're looking through follow through in that area. And then I was also doing some other technicals. I see, really the major breakout would be up over 80. But we'll see what happens at the previous day's high in Gilead, GILD, trading up $1.28. It's 74.18.
And if Gilead is not leading the race, then maybe it is Moderna, mRNA. They delivered their vaccine for 4 clinical trials yesterday, and the Wall Street Journal had a very detailed article on that scoop. So let's look at mRNA here.
I mean, how long is it going to take to get approved? How many people are actually going to have it? I mean, a lot of different factors here. People got real excited on this one. Obviously, when there was news before, 23.95 is where they took it up to. On February 10th, you settled back up now. I'm not going to figure your 50% retracement, but you folks at home could figure that out. Are you going to run into overhead supply here at 21.50? That's filling a gap when it whooshed down on the 11th. So your gap fill is at 21.28. You're doing that. After that, things open up to 22.74. And where did you get to in pre-market trading? You got over that at 5 a.m. You hit 23.28. So this is called $23. If you can keep this going, 23 would be next potential area of resistance, with the high of the move being at 23.95.
All right, about 4 minutes before we go to our first guest.
Let's go with Regeneron, though, before we forget.
Yeah,
we're staying on this drug stuff.
Yeah, okay, so there's a couple more. There was Regeneron, and then we should also do Clorox while we're at it. No, we're going through the stocks.
I know. I'm laughing because it's true. I mean, sometimes these simple things just work in the market.
Well, Regeneron had actual drug news yesterday.
Okay.
So that was the catalyst for that move. They reported an approval for a drug. Their drug gets a competitor to a Novartis drug, and they reported approval for it, and that was the catalyst.
442 was your monthly high in March of 2019. You're creeping towards that area right now, just kind of itching up. So keep an eye on that 929 and 59 second high. You look for follow through for that, and then see what happens at 442.
And then Clorox, which you were laughing at because it's simple, but I don't know why. I mean, I don't know why it was up. You want to say it was up because people were buying Clorox?
Yes.
And disinfectant? Okay,
yes.
Sure.
Yes.
That sounds plausible.
Yep. Clorox, nice day, new all-time high. 168.50 is where you're trading. That's up $1.31. So you're getting follow through in this one. You briefly touched 169 since it's very light volume on this one. I don't know if JV Spec is in the house today. Let's see if there's any size there. 169. This is not a heavily traded stock. But let's see, your volume from yesterday was a couple million. A rally on almost triple the previous day's volume. So, and a stock like that, if you see, 150, 200K, 250K, that's a pretty big order. So we'll see if there's any size in that. Obviously, no size of Clorox according to JV Spec. So there you are, your first target, 169, and then whatever your target's above that, 170, 171, 172, 200.
All right, let's do Mallinckrodt before we go to our guest. Over 2 million shares have traded of M&K this morning. They had earnings. I'll give you the numbers, but there is some news in addition to the earnings that the street clearly loves this morning. So the earnings per share was good, $2.40 versus $2.05. Sales 804 million versus 772 million. So a nice beat for Mallinckrodt last quarter. But more importantly, they have reached an agreement in principle that would resolve all opioid-related claims against the company. In this deal, the plaintiffs would receive $1.6 billion. So they appear to have resolved all the litigation against them related to the opioid epidemic in the U.S.
Wow. Well, up $1.58 at 575. Quite a bit off your pre-market bump. So we'll be using 745 as a target here. You have backed off $1.60, $1.75 off that. So could be running into overhead supply of this in this one. Yesterday, I might unfollow the guy that I saw him tweet about them filing for bankruptcy because that turned out to be the low of the move. I don't know. I mean, this company's just, how much is the settlement? How much cash do they have? How much debt do they have?
$1.6 billion is the settlement.
Okay. Horrible looking chart. I don't know. If you want to buy this one, buyer beware.
They actually might be filing for Chapter 11. I'm not sure. I haven't looked into this entirely, but it's complicated. There's a settlement. There's some more legalese involved. So do your own research. But the street is loving the news on Mallinckrodt this morning here. It is 8:15. I would have liked to bring on our first guest of the day. His name is Dmitry Pargamanik. He is the co-founder of a platform it's called MarketChameleon, and I'll bring him on now. Dmitry, good morning.
Hey, good morning. Thanks, guys, for having me on the show.
Thanks for coming on today, Dmitry. Tell us briefly your background. I know you've got a lot of experience in the options markets. Tell us about that.
Sure. Thanks. And so before we started the MarketChameleon website, we're market makers. We're members in an exchange. And if you pull up an options chain, you're going to see bids and offers for different options. And most likely, those are market making quotes, and they provide liquidity in the absence of, if there's, of course, a limit order from a customer that would take priority. But in the absence of liquidity, that's what market makers did. And just to make a long story short, eventually what happened was the exchanges, they used to be member owned, they demutualized and became public entities. And that diminished kind of the role of the members. So after that, we took a look and thought, you know what, there's really not enough data for options traders out there, at least the way we look at options and analyze the options. And we thought that would be a really good niche. So that's how we kind of got into creating MarketChameleon.
And so explain what exactly it is. And beyond that, though, who is it for?
Right. So really, we are mostly options based. We have stock analytics, mostly options based, and it's really for people who love trading options. It's for options traders. If you like to trade, if you like to look at probabilities, if you like to look at expected values versus price and how far the price diverge from expected value, if you like to look at the markets and trade them in different ways, not just directional, but volatility, or you're looking to structure strategies that can profit from a range of different prices. That's who we're building it. The community who really loves to trade options, loves to look at probabilities, to analyze data, look at financial models.
I want to pull up a couple slides you were kind enough to send our way, and just explain exactly how you approach and how you think about the options market.
Sure. So are you putting up the slide or just we want?
Yep, I got it.
Yep. So the main things, when I look at options, and a lot of options traders, when they look, they think in terms of probabilities. What are the odds? So when you're looking at, you don't think really, is it going to go? Do I know if it's going to go up or down? You think, what I think is likely going to happen. What is the probability of this stock reaching this price or that price, within a certain time period? Also, we look at estimated values versus price. Like, what do we think something is worth, and how far away did the price diverge from its estimated value? And that's like one thing I might talk about today. The other thing is we look at risk and reward. And as traders, we always look at, what do I think my potential return on the investment is, and what is my risk? So, you would look at how much can I return for the unit of risk that I'm taking, and then you would structure your strategy around your potential outlook. So if you just go, and a lot of people ask me, well, can you simplify that, right? Because if you've never worked with financial models, you say, well, what does that mean? How do you get an expected value of something? So in an attempt to simplify it, I start out with trying to draw an analogy of something that everybody might have experience with, right? And if you were looking like for at a house, and you're buying a house, and you're thinking like, the current price is $200,000. Am I getting a good deal? Am I overpaying? Am I way out of range? So your realtor or your appraiser, your mortgage company, what they might do is look at the historical prices, the most recent prices, and I have an example over here. Like, what are the last prices? 215,000, 200,000, 225,000. So you get these list of prices, and what you do is say, okay, what is the average, right? So I see that the average house sold in this neighborhood for 210,000. So if I'm buying it for 200, we would say that's below expected value, below its average, right? So it's like you're getting this $10,000, we'll call an edge or 5% edge. And then this win rate, what I call here is say, well, how often did it trade or sell above 200,000? So we could see, 215,000 was above, 200,000 that's equal, 225 above. So here you see 4 out of 6, approximately 66% of the houses have sold above this current price. And that's how you would start building a financial model to evaluate how far is the price away from the expected value. Does that make sense?
Right, yeah.
So how do we translate that to an option, right? And if you go to that next slide, I'll kind of give you a simplified version of how you would do that in an option. Let's say in an option, usually what you have is you have a stock price, and then you have an option with a strike price. And so here I give an example of like a call with a strike price of 110, the stock's 100. So you see here that for that option to be in the money, to be worth at expiration something, the stock has to increase by more than 10%, right? And let's say you have 14 days to go, and the current market price for this option is $1. So are you getting a good deal or not a good deal? So how would we go about pricing that option? So there are two things we know: that if in that 14 days, if the stock's below 110, if it doesn't increase by 10% or more, right, that option will be worthless at expiration, right? It expires, it's worthless. If that stock does increase above 110 or by more than 10%, that option will have a value depending how high it goes, right? So what we don't know is the probability of that happening, right? We don't know for sure if that stock is going to be not increased by 10% or less or go above 10%. So what we do, just like an insurance company to estimate, we look at that historical data and say, well, how often does that happen in a 14-day period for this stock? So one thing we might want to do is look at our data, and I just kind of just put down 3 observations there, but you look like 4 years of data or 6 years of data, whatever whatever you look at and say, okay, observation 1, the stock in 14 days increased 5%. That means that this stock will go to 105. That's not enough. This option will be worthless, 0. The observation 2, the stock increased 15%. That means the stock would be at 115. Under that scenario, this option will be worth $5, right? It goes 115 strikes 110, $5. Observation 3, the stock goes down 5%. That means the stock will be at 95. This option will be worth 0. So you keep doing that over and over. And like if you just slide one more time, this is how you would estimate, a simplified version to paint it. So let's just say my data shows that in a 14-day hold period, 70% of the time, the stock doesn't increase by 10%. It's less than 10%. That means 70% of the time, historically, this option would be worthless, 0. 30% of the time, it did increase by over 10%. Let's just say on average by 15%. So the average price of that option would be worth $5. So what's the expected value of the option? 70% times 0 plus 30% times $5. We get the long-term expected value of $1.50. Does that make sense?
Yes.
You guys, right? So when I compare that, to the current option price of $1, to me, that looks like it's undervalued, potentially undervalued, right? By 50 cents or 50% edge. So as an options trader, that might interest me, right? Especially if I have a bullish outlook, but that type of stuff would interest me. And that's kind of how we build, we built the website around helping analyze, because otherwise it's very difficult to spot an opportunity. If you're just looking at an options chain, all you see is prices, right?
Right.
You see bids and offers. How do you filter out, and how do you look at strategies that have like really good potential return on your investment?
So, and that's what I wanted to go to. Is one of the reasons why I like the site is, as I pull it up right now, just you've got a few, rather than look at an options chain and have to just decipher for yourself. You've got 3 ideas here. I just searched for Costco. Costco reports earnings I believe next Thursday, I want to say. So you got 3 IDs here based on the historical prices and the current prices. 3 options ideas, but on Costco. I was hoping you could sort of walk us through what we're looking at with each of these little cards here.
Right. So what would happen here is it would look historically at just earnings periods, right? So how did the site just a similar how I just showed you on the historical data, then it would just take the historical data around earnings and look at all the option prices and see what combination of prices look the best. So in this situation, you see like a credit iron butterfly, the first one, and the market price for that right now is $7.54. We think based on the historical data, its theoretical is $5.97. So here you're actually selling. So you want to sell above. When you're selling something, getting a credit, you want to sell it above the theoretical value, right? And here are the links. So in this situation, you would be you're selling this put spread and selling this call spread. So I don't know if you see my mouse, but below will tell you like the strikes. So you see you're buying the 305 put, selling the 315 put, selling the 315 call, buying the 325 call.
Right down there.
Got it. And then what it does is that the percentage edge is just converting how much did the price deviate from the expected value, divides it by the risk, and that's your your edge in percentage terms. The win rate 63% is saying that if you did this trade historically with the same, in the same circumstances around earnings, the same days to expiration, the strikes with the same distance away from the spot price, 63% of the time, this would have resulted in a profit. And then it goes on to the iron butterfly, a bear call spread.
Right. And so these are, just to be clear, these are like the top 3
by edge. Right. So if you take that strategy, you see that little right above it where it says top 3 by edge. So that's top 3 by just the edge number. If you put that drop down, you can do it by win rate and so forth. Right. So when you're looking at options, one thing is I think people start to tend to go to win rates, right? They want to win a lot, but the win rate alone doesn't really tell you that much. You really want to look at edge and win rate together. And I'll give you an example. Like, let's say you had a wheel, right, with 10 numbers. And I told you any number from 1 to 9, if it lands at any number from 1 to 9, 1, 2, 3, 4, 5, I'll give you $1, right? But if it lands on 10, you give me $100. So you see there, your win rate is 90%, right? You got 9 out of 10 chance of winning. It lands on 10, right? You pay me $100. So your expected return, your edge is negative. So that's why it's very important to look at both.
So the other thing I use you guys for is this table that I'm going to pull up right now, which is a table of historical earnings patterns or historical earnings moves in stocks before, during, and after their earnings report. So this is Salesforce. This is a table of Salesforce. Salesforce reports after the close today. And so this is just a table that shows how CRM trades 1 day, 2 day, 3 days, a week, 2 weeks after its report, what its opening gap is the day of earnings. So that would be tomorrow morning. And just a lot of historical patterns, historical movement based on the stock's previous 12 quarters.
Exactly, right. And that's how you would end when you're looking at an earnings, you want to look at the historicals and see like the range of possibilities, range of returns it had historically to try to strategize around that. So what we see here is that historically it tended to gap 67% of the time. It gapped higher right after the earnings at the open. Then what I'm also seeing is that it tended after the open, the drift from the open to the close tended to, then to drift lower, right? So 58% of the time it drifted lower after the opening. I also see that the absolute average move, if you look down there, was 3.3% at the opening. That's the gap move. So what it's doing is taking all the moves, converting them to positive moves, and taking the average. So I see that that's 3.3%, and then the average move to the close is 2.2%. So what it's telling me is that the magnitude of the move, most of it is at the open, and then it kind of closes it.
Right. And the reason I like this is obviously we can look at expected moves ahead of time, but I've never seen the information displayed this way, where it's like, okay, if I want to try to look at how does Salesforce historically react to its earnings reports, I can look at the last 3 years here essentially, and just say, okay, historically, Salesforce, it goes up more often than not after earnings. The average move after 1 day is like 0.6%. And that colors how I should sort of think about this stock heading into earnings today after the close. Dimitri, before I let you go, any ideas for us for the next couple days or couple weeks?
So, yeah, and I've been getting actually a lot of questions about, people are getting kind of nervous that, like, how do I play a bear, in case the market goes down, how do I play like a bearish play on the market? And really for me, I do simple things like stick to vertical spreads, and I can't give advice. You guys put that disclaimer in, but if you look, if you just look at the landing page, and you'll see like bullish ideas, bearish ideas, and for example, like the bearish ideas, it's looking same thing for edge, but it takes out, it looks for stocks that have already been weak right before even before the sell-off, right? So like it looks at the technical analysis and looks at 20 days below the 50-day, 50 days below the 200. The stock has been below all the moving averages, and the idea there is that if you're playing bearish, if the market goes down and you're already playing bearish on the weak stocks, they might go down even faster. And if we get a pop back, usually the best stocks get bought first, right? So they're going to lag the rally. You're not going to see, the idea is that they're already weak, and people, if that's, if we have a sell-off, and let's say, they introduce a stimulus, we get a pop, those will tend to lag the other market, the other stocks.
Right. Got it. All right, Dimitri, thank you so much for the time today, and be safe in these markets, I guess.
Great, thanks, guys.
Thanks,
for having me
Dimitri.
on the show.
Great information.
All right, a lot to get to here. Joel, where do you want to start? We have earnings out the wazoos, and we've covered.
Yeah. What about the store you used to work at, Macy's?
I used to work at? It's true. I worked there for like 4 months.
Did you get fired?
No, I didn't get fired. I did not get fired. I quit. Macy's reporting this morning the just EPS was good, $2.12 versus $1.96 estimate. Sales also beat 8.33 versus $8.32 billion. Their guidance, EPS guidance for the year, mid $2 range is a little bit light. Sales guidance for the year, mid to high $23 billion range, also light. So light on their guidance and strong on their earnings for Macy's.
Ran into some overhead supply. You've given back a lot of those gains. You ripped up to 1678. And what do you have here? Your 3 and 4 day high, 1635 and 1666 and 1689. So and another 1665. So if you were out there going into that quad top, you got something off here. I don't expect Macy's to go back up to that area. Anything can happen in this market, but already faded a $1.70 off the pre-market high. For this one, you had a big range in the pre-market session, still holding yesterday's low at 15 and a quarter. And I think if I got short beyond 15 and a quarter, I don't know how far we can go here. We had another low I see a matching low from December 16th to 15 and a quarter, another low at 15.17 on the 13th and 15 and a quarter on December 12th. So I think we got that one covered.
Let's do Palo Alto Networks getting cracked here this morning. And Joel, how many downgrades did you say they had?
4 downgrades.
Well, that'll happen after a report like this as I pull the chart up on the screen. They reported yesterday after the close. Q2 EPS was that beat. That was good. $1.19 versus $1.12. Sales number missed $816 versus $843 million, but their guidance was very bad. Q3 EPS guidance, they gave a range of 96 to 98 cents. Estimate was at $1.25. Sales guidance was fine, but the EPS guidance for the quarter and the EPS guidance for the year, for that matter, were both very light. And that is your catalyst on Palo Alto.
Do you ever hear the old saying, like, what a bull eats in a year, a bear scarfs in a day?
Yes.
Well, for this one, it would be what a bull eats in 1, 2, 3, 4, 5, 6, 7 months. A bear eats in 3 days here. You're getting a reset here of 200, trading at 201. God, man, there's just someone. Buyers and sellers are just squaring off here, folks. I wish I could tell you which way to go on this one. You have support here at 199. That's your pre-market low. You're just hanging out at 200. So there's still pressure on this thing. 200, a psychological level. Man, oh man, got to go to the monthlies here. And I would see if they could flush them out under 200, take it to 196.29. That was your September low, and then see if you can bounce there. So if you could really crack it under 200, 196.29 and then 192.17 are your next monthly lows. If you get a super aggressive buyer here and they can take it over, let's call it 203.50, you might get some kind of run to the upside here, but a lot of pressure on PANW this morning. 4 downgrades. Why couldn't you downgraded it before? But I guess they wait to see the earnings reports.
Well, that last time you checked it was like an hour ago. So
yeah,
there could be more out by now.
Yeah, I thought I saw more than that, but that's what Spinner said.
I see 1, 2, 3, 4. I see 4, 5. I see 5.
Okay.
And all right.
It's not enough to make me super bullish. Like what was the Grub one? How many was that?
Yeah, that was a lot.
Let's look at that one because that was a bullish indicator. Let's just go back to Grub.
It was on October 30th. 1, 2, 3, 4, 5, 6, 7, 8, 9 downgrades between the 29th and the 30th.
That is
actually strike that 11 downgrades.
Wow. And you know what? I just took a glance at Grub here because, it had the old exploring strategic alternatives thing. and it still went on to make a new high. So, 58 and change in this thing. Usually when they're looking for strategic alternatives and they have no alternative, they usually give it back. But Grubhub here, I guess people want, when they can't leave their house and they're watching Zoom, they want food delivered by Grubhub. Have you ever used Grubhub?
No.
They charge you like $5 or something, don't you? Some outrageous remark.
They got to make money. Got to make money, Joel.
Yeah.
All right. I do want
store.
to bring Nick Chahine on here. Nick, what are your thoughts on this market?
Nothing has changed except sentiment is a little freaked out. Last week in the chat room, we were discussing the fact that the media was setting this up by the way they're covering it. For the last 2 weeks, I've been saying, what are you buying? What are you buying? The impact is going to be big. Let's be patient. Both sides need to be cautious, the bulls and the bears. And it wasn't a reason to short all out, even though I was short biased coming into this. So just now, it coincides with the segment that CNBC had with Buffett that they scheduled like 2 weeks ago, but they chose not to cover any of the bad stuff until when their programming fits it. So now everybody's on the bandwagon of the same stuff that was true 2 weeks ago, 3 weeks ago. Who didn't think that it was going to impact the P&Ls when the biggest country on the planet, the second biggest economy on the planet, the growth engine of the world, quote unquote, for the last, 10 years, China being closed 2 months effectively, completely closed. It's just insane not to expect it. But now it's in the ticker tape. So we rely on the charts to see where the price levels are, where supports will kick in, and see if we can pick the next tizzy maker as far as the headlines. Market-wide, I don't panic out of positions. I stick to the thesis. If I bought X stock for X reason, if that reason is still there, then I shouldn't worry about the dip.
Nick, I want to ask you, I'd like to follow you on Twitter here. And, you said, it was a tough day yesterday, but you said if you're following, the technicals, that it was an easy day. And, I had a couple levels that, came into play. Of course, you got to step ahead of the levels that you think are good levels. I just want to talk to you about time frames of charts. And, when you're looking at things, I try not to go, shorter than a 15-minute. I like to look at my dailies and my weeklies and my monthlies, always on the weekends, for sure, the dailies every day. Just talk to us about how you adjust your time frames.
The time frame depends on what I'm trying to do. And I think I said it was an awesome day if you're a fan of the charts. I wasn't gloating that it was an easy day, hey, because I just happened to be short biased. So as far as time frame, I almost never stick to one. It all depends. So if I'm watching the day-to-day, the minute by minute action covering the S&P contract, the ES, then I usually prefer the 5-minute for that. I rarely go to less than 5 minute on the VXX intraday if I'm watching that. If I'm looking at a chart for investment purposes, I usually start with the daily to get an overall picture and then zoom in to the 2 hour, 4 hour, 30-minute, and then expand even to the weekly. You just went to the monthly on Palo Alto. And I agree with your comments exactly, because I too zoomed out. I took the weekly and I got the same picture that around 200, it's a pivot zone. But if you're focusing on a small time frame, you miss that. You're panicking, trading each tick. But if you zoom out, you pick the 196-ish. That is the last bounce level, and it's support until it fails. So time frame is important, but rarely is there one that fits all. So it all depends on what I'm trying to do. And I usually use a whole bunch of them.
Okay, that's pretty much the answer I was looking for. For your, I know you like to do a lot of spreads, and something that I've learned from you over the years. Are you always putting stuff in as spreads, or do you kind of leg into them like I do?
Funny you asked that, because just last night we wanted to take a stab long for the overnight bounce. And I thought that a call diagonal in the SPY would be the right way to do it. And I said, I don't like to leg into spreads, especially if they're vertical spreads. But that was one that I did. So, for example, if I buy the call for May or April at 3:30, I can wait and see how the price action is developing to see when and where I want to sell the call against it that is shorter dated. So the total risk would then be, once I take the spread, is the net debit that I paid for the spread, but the makeup of it changes. Sometimes you get lucky. You buy the one leg and then you get a move in that direction, and then you sell the second leg and you're almost free into it, or even credit. So those are great because it's a no-lose situation. I just did a video on it last week for somebody.
Okay.
I think that it was Microsoft that they were playing with. And
Yeah, there's an old saying from the floor, and I think it might be from Bob Wright about legging into a spread, but I don't think I can't think. I'll have to ask Dennis when he gets back, but it's something pretty funny. I think one thing that I kind of learned from you, my legs sometimes can be a little bit longer. Like for example, I had some puts yesterday, and I really didn't want to sell them. I didn't want to cover the whole thing, but I was like, man, oh man, I just don't want this to erode. I don't want to get back. And I made that mistake a couple of weeks ago when we had the bigger turnaround at the end of January. And it just gives you another option on an option. So I sold the lower strike for a much higher price than I bought the original one.
Mhm.
And then if I get a good feeling one way or another, I might try and leg out of it. But I think that people that are doing options, I think that, you don't, if you're unsure, I think I took off half and then I put a spread in on the other. And then it just kind of, you just know your P&L doesn't move as much. But I just think that's something that people should keep in mind when trading options.
It's also important to know the ticker. So example, FXY, the yen, I went long it based on the yen chart. And I sold aggressive put spread at the money and even a little bit in the money, anticipating a bounce. And the dip yesterday in the market shot the yen up. So it was an immediate winner. But I wasn't comfortable with the ticker itself. It was my first in a long, long time to trade it. So I, booked a profit early in the day. So I could have left it on, but I would not try to leg into or out of that ticker because I don't know it. Another example would be like the USO or the UUP. They're hard to trade as spreads. So I do single legs. So the point is, know your ticker before you decide how you trade it.
All right. We still got a few minutes here with Dick Chahine. He's the author of Create Income with Option Spreads. Join us every other Tuesday to comment on the market. So we usually get a couple tickers in here, but I'll throw one out for you. I just lost a bet to Dennis on Peloton here. And I don't know, let my opinion get in the way. It was around 30 and it popped and I took 35. He took 25. He finally got me on one of these. We ticked 24.52 yesterday. And then boom, it was off to the races. So I lost on that. Let's pull up the chart here at Peloton. Nick can walk us through his analysis.
Okay, so funny because I do put a lot of alerts when I go through charts. Some on the upside, some on the downside. And I had an alert for Peloton that triggered yesterday. At the open, by the way, I had like 13 of them. Ping, 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 ping. I was like, okay, so what do? I did nothing. I just said, you know what? I'll look at all of this later. I'm not going to do anything.
That's interesting.
One of which was Peloton, but it said buy the dip. So that was yesterday at the open, and I wish I had looked at them because I would have made some money right away. I didn't, and that was my fault. So if you look left on the chart, and you look yesterday's low was almost exactly the neckline breakout. And I should have bought the dip. My intention was to sell puts into the fear, and I totally missed it. So from a trading perspective, that was the opportunity there. If somebody wanted Peloton for the long term and kicked themselves, they didn't buy it earlier on the run, that would have been a good entry point for the long term. As far as fundamentally, I'm worried a little bit because just this weekend I was at Costco, giant setup for Echelon. So
yeah, there's competition out there.
Sounds like it, looks like it. Plus on TV, there's the other one, Tonal. It looks pretty slick. It's got resistance and it comes out of the wall. So, and it's interactive. But it could be that the market is big enough to accommodate all of them. But that would be a concern. However, yesterday was an opportunity missed on my part.
Okay. Any other?
Question from the chat about
Sure.
Dropbox. Question about Dropbox here from the chat.
Okay.
Let's count how long it takes Dix to get a chart in.
Oh, okay. The chart is up. So I don't have any markings on it because I haven't traded in a long time. The reaction was fantastic. And what concerns me about it is the fundamentals. I use it for convenience, but I will never pay them anything because I have the alternative. Now at 24, if you look left, that's a big ledge from which they fell back a couple earnings ago, August last year. So in my experience, when something comes up, I would have probably had a note there saying maybe you can fade it. So I wouldn't. This is not a starting point. When a stock recovers to a gigantic accident scene, it tends to face resistance just because, especially that in this case, it's also the point of control. So from a volume profile perspective, that's mathematically where most of the action happened in the last few months. And if machines are actually doing most of the trading, the machines are going to wake up and say, hey, I traded it here last, let's fight over it again, thereby creating congestion. So it was not an obvious starting point. So those who chased the pop probably made a mistake right away. However, long term, they might have different opinions. And if they take out that line, then it becomes a trigger to go to 26, where the next battle will lie.
Real quick, Nick, someone in the chat wants to know what the blue and yellow bars are. And I would just have you.
Right, Nick?
On the left, that's the volume profile that I'm talking about. That orange line that cuts across the whole screen, that's a mathematical point of control. So if you want to do homework, learn volume profiles. If I have a couple of things I can keep on my charts, that's definitely one. I can get rid of all the other lines. I want levels and volume profiles, and those are the truth. The rest is just how you see things and how you draw the lines. You can draw them any which way you want to make your statement, but these don't lie. That's actual fact. That's basically, the volume bars on the bottom on any chart tell you the volume when it happened. Those volumes on the left, the bars, tell you where they happened relative to the price axis on the right.
Is that Stottlemyre or is that a different volume profile?
That's the basic volume profile that I pulled up from TradingView.
TradingView. Two stocks, and then we're going to let you go. One is SBRA from Rob Hood, who always enjoys your analysis. SBRA, man.
SBRA, that's the first one to me.
Typical Rob Hood chart.
Right?
Knock on the door.
Yeah, so the opportunity is just above here, but and it's coming from lower, higher lows. So just know your pattern and that the range is tightening. So something is going to happen. I can't tell you which way, but I can probably guess what's going to happen after that. So it would be to monitor the levels, and I'll put, like here, I would put an alert at 2260. And if it hits, it comes and wakes me up. Hey, check it out. It should be going to the next level, which is about $1 or maybe $1.50 above it.
And Uber update.
Uber update. I haven't looked at it, so I'm true to myself there. I am concerned of the impact. It should have a tremendous impact from the virus spreading through the world because it is a world company. But long term, it doesn't change the thesis. This virus is devastating to the people that are getting it. I hope, a few weeks ago I said, we're not getting the right numbers from China just because they're just too perfect. Every time you do the math, it's 2% kill ratio. And it's just too perfect in my opinion. So I said, if and when it jumps outside of China, then we will get the right stats. Okay. I hope they stick to the 2%. So Uber would just be fine long term, but short term, it's not an obvious starting point. And I'll tell you where it would be above 42. Then it might be getting a little more bullish posture. Just because, like I said earlier, this was a neckline from which they collapsed not too long ago, July, I think, of last year. So they don't usually slice through them like butter.
All right, Nick Chahine is the author of Create Income with Option Spreads. You can also find his work at sellspreads.com. Nick, thanks for the time.
I appreciate it. Looking forward to the next one.
All right.
Thanks, Nick.
All right. Lots of earnings here.
Let's go. Let's rip through
Let's
them.
go to Shake Shack. For a long time, we wondered why the stock traded at such a high multiple. The earnings are not good this morning. Well, I should rephrase. The earnings were okay. The EPS, 6 cents, and the sales missed a 151 versus 153 billion dollars. But the guidance was bad. Their comps were down 3.6% on a year-over-year basis, so they're slowing growth. You never want to see slowing growth. Guidance was below estimates here. Not a good report at all for Shake Shack, and I guess it doesn't have that as high of a multiple anymore. If that was your argument,
yeah, down $10.37. Boom, broke through 72. All hell broke loose there. Can't really tell you the low it's in because we're resting just off the lows of the pre-market session. Your last print 63.20, your low 62.53. You're filling a gap in here. Do you want to be super patient on this one? Hold out for $60. Don't have an exact number there, but I got a let's call 4 lows, 5 lows, 6 lows, 7 lows, 8 lows, 9 lows, 10 lows, 11 lows in a row.
Jesus.
Between, I just kept on moving up on my data window, and they kept on popping in there between 59 and 61. So, hey, you don't have to be a mathematician to make 60 good support if you get a chance to buy it down there. And Shake Shack, either covering a short or thinking about a potential long.
All right, HPQ is trying to fend off Xerox here this morning with their report. Their earnings that reported or yesterday after the bell. The earnings were fine. EPS beat, sales missed, guidance was in line, but beyond that, they are buying back $15 billion of stock, trying to deliver that shareholder value and fend off a takeover from Xerox.
You got a big old boost in this heavily traded stock. Wow, man, all the way up to 23.46. That's a big move for the stock. It did have big volume, but if you think about how much this trades during a daily session, you need a lot of stock to do that. So that high could be safe. What I'm looking at, though, is you had a pop, I think, on one of the initial takeovers at 22.87. You're opening into that right now, currently trading at 22.85. Sellers step down. I don't know, JV spec, if you're in the house, do you have anything at 23 in this one? So this one, let's say we open up in this area. You want to see it go 22.90, 23, even 23.10 bid, and then not dip back under 23. You get a little whoops trade there. Just long term, I'll just repeat Dennis's thesis on this one, because he said he's just worried that HBQ is gonna. He was in it. He was long it. He rang the register. He just doesn't know if they're gonna flip the switch and then try and buy Xerox. And if you did, you would have the acquirer take some heat on that one. So there's a little bit of fundamental and technical perspective on HPQ. I liked it. 200K at 23, says JV Spec. So see what happens on there. Thank you, JV.
Let's go away from earnings for a second here. NIO, quote unquote, the Tesla of China, got some much needed funding yesterday. They raised $1.42 billion. And Bernstein likes it, upgrading them to neutral this morning, giving it a $4 price target.
So what do you do at 524? If it's a $4 price target, what do you do at 524? You sell? I always ask that question.
I don't know. I have no idea.
You guys follow this stock. I know Spinner does, or go for the W. I don't really follow this one that much. It has been riding the heels of the Tesla train. Trading at the highs of the pre-market session, 5.25. Boom. What's that little spike high? That must have been the day that Tesla made its all-time high. 565. There's your target. Let's see. Just look. That'll be interesting. It hit 565 on January 22nd. And when did Tesla make its all-time high? Tesla made its all-time high. Nope, that was after that, 968.99. So keep an eye out, 565 NIO.
We didn't do Home Depot yet. I forgot about that entirely.
Depot.
Yep, let's do Home Depot right now. They're reporting this morning. EPS $2.28 versus a $2.11 estimate. So beat on that number. Sales 25.78 is the slightest of beats on the estimate there. They're also raising their dividend, their quarterly dividend from $1.36 to $1.50 per share.
Nice spike, up $7.18. That's a big old move for a big old stock. Trades 3-4-5 million a day. $1.20 off your pre-market high, right on the nose at 248. 248 even. Right on the nose. Maybe this one, instead of trying to short it up here, maybe throw like a low ball bid in here, because there might be some offers stacking up all the way from 240 up to 247, and then the designated market maker scoops up all those offers. I'm just giving a hypothetical scenario here, 243, and then rockets it straight up. But once again, maybe JV Spec could take a look at the book in that one.
There are a couple more earnings, but if you have any you'd like us to hit, drop them in the chat right now. Let's go to LL, Lumber Liquidators. Either this EPS is not comparable or they just blew it away. 56 cents per share is what they made last quarter versus a 15-cent estimate. Sales of $278 versus $272 million. So again, the earnings number is either not comparable or it's a massive beat.
So the first thing I do when I look at this, I'm like, why the heck did this go to 1184 2 days ago?
Yeah, I don't know.
And I go to my trusty Benzinga Pro, and that would have been Monday, right? Because no, today is Tuesday, so that would have been Friday. Friday.
Oh, there was some like dumb chatter on Reddit, but I wouldn't know.
Yeah.
I don't know. I don't know.
Yeah. You have created some overhead supply here, but let's see what the close was. The close of that big day was 1045. So you hold 1045 here. Boom. Maybe get a little shot up test at 1184. But man, a lot of movement in a $10 stock. So we'll see what happens.
Wait, I would like to know, go for the W. Do you actually think that the Wall Street Bets community is large enough to move this thing? Wall Street Bets, for those who don't know, is a community. I'm actually in the community, but I don't participate. I'm just a lurker, and it's a forum on Reddit that makes fun of the market, make fun of each other. They make fun of stocks and the entire thing. It's just a bunch of trolls who are joking about the market and trading and losing money a lot of time. And that's the joke. I don't know if that's actually a large enough community to bid. Oh, we have someone here from Wall Street Bets. Okay, well, it's a highly entertaining, highly engaging community, but not at all serious. So know that if you're going to venture there, the entire thing is one giant joke, which is part of why I enjoy it personally.
Yeah, I'm not not familiar with that site. But it's just interesting that, you're at your close from that day at 1045 right now. So important to hold that off the hop in pre-market trade. I mean, it's right there. Bulls and Bears are battling pre-market high 1069.
Well, let's do Tupperware. It is the number one stock on my down scanner here this morning. TUP down, last I checked, around 21%. They had earnings yesterday, and the guidance was light. And this is one that I forget exists all the time.
Oh, man. Down $1.38. I mean, pull up the monthly on this one.
Okay,
Spencer. I mean, you got a ski slope there.
Oh my goodness, $70.
That's a trend right there, folks.
Straight down from 70.
If you're short, figure out where you want to buy it. You're crashing through the former low of the move. Well, let's see. 542 was a former low of the move. Use that as resistance. This new all-time low for it. So I don't know. Pick where you want to buy it if you want to cover a short. Maybe layer into it, but not looking good on the weekly, daily, monthlies, or any kind of chart that you can pull up.
Yeah. All right, Joel, final thoughts here for the market today. We seem to be stabilized at least.
The market's spunky. It's really been all over the place, getting up to 59.50 overnight. That low was made right on the open at 14.25. I think bulls would be in firm control of today's session if you could clear that pre-market high as it coincides with yesterday's high from yesterday. I'm on the downside. Mid-range is 32, 37. But you traded through it so much, it kind of loses its validity. So maybe if you're looking to get in this on the cheap and you don't want to hold out for that potential triple bottom, at 6 a.m. this morning, we hit 32.20 and a quarter. So a lot of volatility in here. Love an inside day here. And actually, we could get it.
Why would you love that?
Because because a good play the following day.
Okay.
You know, the market digests, calms down, and then, you know, you could play it. It really wouldn't be an inside day because your pre-market high was up at 33.12, but that intraday high, I mean, that's when a lot of the volume comes in too. So keep an eye on that. 32.59.50, just under your intraday high from yesterday at 32.60.
All right. I want to thank our guests today, Nick Chahine and Dmitry Pargamanik. If you want a discount of our Benzinga Pro, which is our real-time news platform, click on the link in the description of this video on YouTube. That'll get you a free trial and a subsequent discount should you choose to subscribe. You can always catch a podcast of the show or rewatch us on YouTube. Email us premarket@benzinga.com. Give us a call, leave us a voicemail, 734-494-0246. That's all I've got today, everyone. Have a great rest of your Tuesday. We'll be back